What expenses can I claim in my rent-to-rent business? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. As with any business, rent to rent, there are many different expenses we can claim. Now, I'm going to look at today things like HMO rent to rents and serviced accommodation rent to rents, because I find that they're the ones which tend to be the ones that people use and work on, mainly because there is the higher income. So the rent to rent model really works very nicely with them, as there's additional income that you can get, and it helps the landlord who maybe doesn't want the hassle of doing something with their property. So what expenses can you be claiming in your rent-to-rent business? Now, let's go through some of them, and then we'll have a look at a focus on some of the HMO and serviced accommodation specifics, so we can just ensure we cover all the areas that you may need to know about. The first area I'm going to jump into is your repairs and maintenance, because with HMOs and serviced accommodation, there is probably a lot more repairs and maintenance than just in a standard buy-to-let. Now that means any of these are all allowable expenses. The key thing here that is probably different to a normal non-rent-to-rent businesses, you may need to consider capital expenses a little more. Whereas as a rent-to-rent, you're probably negotiated to a certain degree in your contract that if it's a new roof for the property, then it's probably the landlord that hopefully is going to be paying for that rather than yourself, as it's an improvement to the whole property. Maybe you might do a repair on the roof if there's leaks, but you're probably not going to be buying a new roof. So most of the repairs that you are doing are going to be allowable, and you potentially may not need to worry about the capital aspect of things. But check out the capital versus revenue expenses video to just find out what we mean by the capital and the revenue, so that you know whether you may be treading into that water, as that might be a negotiation with your landlord of what they're going to contribute if it is a larger element. As with any business, you're going to be having some sort of insurance expenses, because you want to make sure you are looking after the property that the landlord has given into your hands to take care of. So this, again, an allowable expense. Just make sure you get the right sort of insurance to ensure that you are properly covered. In most of the rent-to-rent agreements, you're going to be having to pay the rates. If it's not a student property, you're going to have to be paying the council tax, and you're going to have to be paying all the utilities, the water, the electricity, the gas, and all of these sorts of things. On all of these, they're fully allowable. You just need to keep all your receipts and evidence, your payments through your bank, and then these will be allowable through the business. The additional one that you won't get in most businesses that are not rent-to-rent models is you'll need to pay the rent to your landlord, and this is an allowable expense against your income. So again, something else that you will have in addition. Any service charges or ground rent which may be payable on a flat, for example, that is all again allowable depending what negotiation you have made with the landlord on who is going to cover those expenses. If you're using a managing agent, then those expenses will be allowable as with any other type of tenancy, and any accountancy or professional charges will potentially be allowable. For certain legal ones, you may just need to check those out with an accountant to see whether or not they are allowable or not. For example, setting up certain leases may not be allowable. That might be a capital expense, but it depends specifically on that type of lease. As we've mentioned, management, there may also be wages for things like gardeners or cleaners in these types of properties. And if that's the case, they are all allowable expenses because they're maintaining and managing that property to keep it in prime condition to get the maximum rental income. Depending how active you are in the management, you may have travelling expenses. So if you are visiting the property on a regular basis, travelling to and from the property, or potentially picking up different, repairs and equipment for the property if things are broken and you have to pick something up and drop it off, all these sorts of bits are allowable expenses, and you just need to keep track of your mileage so you can claim your miles per journey on what is allowable. This is your 45p per mile for the first 10,000, followed by 25p after that. You may have some administrative expenses, things like potentially a telephone if you've got a specific business line. You may have stationery and paperwork. You might have ink for your printer, depending how much you do on paper and how much you do digitally. You may have digital assets that you're using, so there might be some apps or things that you're using to help manage and run your business, or you might have software such as HMO, such as QuickBooks, such as Xero, that is helping you manage your business. And again, all of those expenses would be allowable against your property income. You'll be able to claim a use of home as office allowance, and that will depend on whether you're a company or an individual of how that is calculated to, again, give a small allowance to you as an individual for using your own home within managing your property business. Depending on the size of the property, you may need licenses. So for HMOs, you may need a license because you've got 5 bedrooms or more, or you may be in an additional licensing area, which means that you do actually need a license to operate your HMO in that area. These costs, as you would guess, are allowable. There is also the question of whether you need any fire risk assessments, and again, as professional services, you would be able to claim these, as well as things like EPCs and electrical certificates, as well as your regular gas certificate, which you're getting each year. In relation to your HMO, there's not really any specific expenses in addition to these, and the main thing is it's wholly necessarily exclusive for the business use. So anything related to that property is going to be allowable. For your serviced accommodation business, there may be additional things if you're providing shampoos and if you're providing maybe champagne or tea and coffee and things like that. So there may be a few additional bits and pieces that you are including, and again, as long as they're wholly necessarily and exclusively for the purposes of the business, for running your serviced accommodation business, you're fine to include those as business expenses. You will also probably have things like booking.com or Airbnb, however you're advertising your property for serviced accommodation. These expenses, again, are all allowable, as well as the payment systems you may be using, such as Stripe or PayPal, or whichever one you have chosen to look into. As a serviced accommodation business, you're also likely to be able to claim capital allowances on the furniture, the assets that you put into the building, things like maybe dishwashers or fridges, freezers, ovens, all these sorts of things where there may be capital allowances available. Check out the video on serviced accommodation and this side of things to see what you can be claiming in regards to this for more detail. Overall, as a property business, there are many expenses that you can be claiming, and check out the videos on HMO expenses and serviced accommodation expenses to see what you can be claiming on those strategies. But overall, as a rent-to-rent business, you can be claiming most of the different expenses that are allowable. The main addition is the additional expenses that you're incurring running that rent-to-rent business. You may have legal fees, you may have other things that are going to be allowable. The main area I would say is make sure everything is wholly necessary and exclusively for your rent-to-rent business. Work with an accountant who's willing to work with you on which expenses are and aren't allowable. As an accountant myself, I tend to tell people to put down as much as possible, especially in the first years of running their business, because then if you know you've spent it, then we can assess whether it is allowable or not, and then going forward allocate yes or no to that question. If we don't know about it, then we can't be aware that something needs to be claimed. And I know the many conversations I've had where someone said, oh yes, we spent this, I go, that's allowable. They go, oh, I didn't realise, which is why I say put as much down now, and then you can assess which is and which aren't allowable as you go forward, rather than trying to remember what you did spend on something later. If you do have an expense that you're not sure is allowable or not, then do leave a comment and we can look at it together. Hopefully today you've discovered what expenses you can be claiming in your rent-to-rent business. If you're not sure if something can be claimed, do leave a comment and we can have a look at what can be claimed together. Please like the video and do subscribe to the channel. Let's make tax less taxing.